Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Much appreciated. Got a packed program here, so we're going to get straight into it. But just to give you a little overview, we're going to have a look at the short-term Bitcoin price, why I think it's still going to go down either today or in the next few days to below the 12,000 level, and we'll also be showing you the longer term picture, so as we must keep that in mind so that we don't get sucked into the emotions of the short term picture with the Bitcoin price movements. And I will also show you the Dow Jones index and why that chart is showing a very dangerous sign in the next few weeks and months that will impact on Bitcoin. So without further ado, let's get cracking. Okay, so we'll start off today by showing you the chart I showed you in the last video. And I said about 2 days ago that we have not had a weekly close. This is the weekly chart. This is the all-time high of 20,000. This is the second all-time high of 14,000. And this is where we're at currently. And we have not had a close above this yellow line, that's 12,000, since this point here. So this was the last time. This candle here was the last time we closed above the 12,000. And since then, for the last 3 years, as you can see, we've had no closes. And currently, today, we are going to be closing. Are we going to close here above this yellow line? Well, I said in the last video that we're about to have a dump below the 12,000 in the next 72 hours, which took us to tonight. So let's see what happens with this by the end of today. Will we come back down here? Yes, I think still that we're still due for a correction. However, if it doesn't come back down today and we close this, this tells us something that we're getting very, very close to trying to break the 14,000 last time all-time high that we had in June 2019. So this is going to give us a lot of information if we actually keep this close above the 12,000 line. And the reason why I say that is we're going to have a look at the comparison with the last bull market and how that behaved. Because if you look at this candle here, from this last close, if you have a look, from this last close, we are to this candle today, you can see we are 145 bars. That's weekly, by the way, so it's 145 weeks. If you go by the days, it's 1,015 days from the previous close above this particular high to breaking it here. And I've put down here the 14,000 and 20,000 because I want to show you the equivalent prices of the 14 and the 20 in the last bull market from 2014 to 2017. So if we just have a quick look at that. So just zooming in, when we zoom in this price bracket here, you can see that the 20,000 equivalent here was this all-time high. If we just move this line there to the side, then you can see that this bit here was the previous all-time high in the last bull market. So we'll put that back there. And then the 14,000 equivalent is this high here. So if you look at this bull market, very, very similar. So that was the all-time high in the last bull market. We came back down, made this U shape, and came back up to test this level here. Exactly the same here. This was the all-time high previously in the last bull market in 2018. We came back down, U-shaped rally up to this point here. So this equivalent is this equivalent here of the 14,000. Then we got rejected here and we came back down and made this V or U shape, whatever you want to call that, back to trying to hit this target here again. And this exactly, when we went to here, we came back down in the bear market and we come back up here to retest this second all-time high, which was the equivalent of that. And look what happened here. So we've got this candle. What is this candle equivalent to here? Okay, let's just zoom in on this bit here so you know exactly where we're at. Let's zoom in. So it took, as we said, 1,015 days from the previous close above the 12,000 candle currently. How long did it take in this market here from around November 2013 to when it broke up here again? So let's take that equivalent. So this is the last close here. You can see this close just above this equivalent of the 14,000. If we take it across, we're here, 861 days. So what we've got currently is that we've broken, we're on this candle possibly here, and if we do close above this, so that means that we've taken a little bit longer to close above this level than we did in this previous bull market. Now look at what happened after this candle closed above this very strong resistance line. The next candle is this red line here, and once we close the following week, if we measure the fall from the top there to the wick down there, we had a 28% fall. So even if the candle over here closes, that doesn't mean that we're off to the races all up here. We're not. We will always have corrections. So my prediction is still that, you know, we'll close below this, but even if it doesn't, we always have to remain flexible and fluid in our market. We must never get stubborn in what we're thinking. So we should always use the new information as a knowledge base of what we can see what's happening. Remember, the charts with the Bitcoin do not repeat themselves, but they do rhyme, just like these days that it's taken for it to come back to here. We're going to see when it will actually break. So when did it actually break the equivalent 14,000? So that's a different question altogether. So if we go back to this chart here, there we go. So the equivalent of this, it broke there. However, as you can see, it came back down, as we've just said, and it came back to test this equivalent red channel back down here again, there. So even though it's making new highs from a previous time, we're still going to test this red channel before we go back up and what have you. So what the charts are really saying is that even if the candle here breaks up above this resistance line, this trend line, whatever you want to call it, it still took from here all the way to this candle here, this one, which took 19 bars, that's 19 weeks, 133 days further before we broke the 14,000 equivalent. So please don't get worried. What I want to do is to reassure you that it doesn't, just because we're pushing towards a higher level here and all the other YouTubers are saying, oh, we're now off to the moon, and they're doing all these very technical videos about the bull run becoming really very, very fast now. Really, you've got to take the emotions out of the market. The emotions will kill your money. You mustn't get sucked into the emotions of the market, because this is what it's designed to do. Because when it closes above this, the price for Bitcoin, yes, may still go a little bit higher. But as we've seen previously, the chances are, the probability is we're going to come back down here. And remember the channels that we drew, the red channels. I'm going to go through that in a minute, but I just want you to know that just because there is a lot of hype in the market and because this candle is closing above 12,000, it doesn't mean that we're suddenly now going into a parabolic bull market. Obviously, it can be. The probability for me, and I can only speak for myself, and I can't give any financial advice. Everybody has to come to their own conclusions. I can only tell you what I see in the charts and what I'm actually trying to correlate this with. And I'm correlating this with the previous bull market of the 2014 to 2017. And that's telling me that this is not what it's going to do. What it's telling me is that we are possibly going to break this. However, I still think we're going to come back below the 12,000. But even if we did actually close above the 12,000, it's only a matter of time before we do this and come back into this channel that we drew, and I'm going to show you that in a minute. We drew this channel, and it's going to come back and retest this lower level. So let's have a look at that and see exactly where we're at with the targets that we've had over the last 6 weeks or so. Okay, so this is the red channel, the red line here, the top resistance line and the red support line here. So this is the channel we've been playing over the last 2 or 3 months now. And this pattern here was actually predicted from this here. So obviously we'll follow this pattern here, this double bottom. If I have a look here. So we came to this double bottom pattern here. And we said that this is what it's going to actually repeat over here. And I drew this many videos ago, so if you want to check them out, they're all there for you. So when the market was coming back down here, we said that this is now going to form a double bottom on this support line. So it went from there, came back here, and we said that there's a final double bottom to create a bigger double bottom here before we start going up to the races over that side there. So it's played out exactly where we wanted it. And in the process of this, as you know, if you've been watching my videos, we set these targets. That the first target was going to be the 11,100. We'll have a little stopover, as we did here. We had this stopover at 11,100. Then we went further on to what the second target was at 12,000. Again, we had a little bit of a resistance there. Then our next target was the 12,500, and our final target was the 13,200. Now we've done all that, and I said to you in the last videos that it could well be that we could actually come straight down here, but we followed this pattern at the top. So it could well be that we're actually going to go along this line for a while before we have this fall, which is the equivalent of this one here. And so for me personally, it looks to me as though that we are going to go a little bit further up here before we go down here. However, as I've said earlier on, that I'm expecting a close below the 12,000 tonight. So it may well be, and these are all possibilities and probabilities. Remember, in the market, never get worked up about why can't people give you a certainty, because nobody has a crystal ball. Nobody can tell the future. Okay, the best guide for you is always what's in the charts. The previous chart seems to always correlate, always rhymes, never repeats but rhymes, so it gives you a good guidance as to what may happen in the future. And this is exactly what we've been following all along here to where we are today now. And I'm expecting this to happen in the next 12 to 24 hours, that for us to have a fall to around about this level. If it doesn't happen, like I've just said previously, if it doesn't happen, don't panic that if we close above here, above this line here, above this 12,000, if we close anywhere above here, then the chances are we're going to still come back down to this channel at least one more time around the 11,100 level before we actually make further moves into this channel. And when I zoom out, you'll see where this channel is. And for those of you who have been watching my videos will know this channel's inside out. So let's just zoom out. This is the bigger picture. I want you to keep this picture in mind because it will help you to make better long-term decisions and not get sucked in by the short-term emotions of the market. So remember, we're following this channel here from back in 2015, 2016 market. We're following this channel as the equivalent of the current channel we're in, and we're up to about here. We're up to about here around the 25th of October. So this is the channel and this is our current channel. And this is what we're aiming for here. This is where our target's going to be. And this is the current target of 300,000 in between these dates here, October 2021 to the 1st of January 2022, i.e. the end of December 2021 next year. So in between this, we're expecting the market to top out. And we've got our 2 exit indicators, and I'll keep going through them from time to time. For those of you who are new, if you watch some of my previous videos, you'll have some titles saying exit indicators where we are going to be getting out of the market. Have a look at those, but I will go through them again. I don't want to keep repeating them, but we've got 2 excellent indicators that tell us exactly by the day on which time frame and which price target that we need to get out of Bitcoin when it tops off before it starts sliding back down to another bear market. So this is the overall picture. Now I want to quickly go through why I'm thinking that the price is about to fall for Bitcoin. And I showed you these indicators in the last video, so I just want to remind you that currently we are topping off through some of these indicators. Okay, the first indicator I want to show you is the RSI on the daily chart here. And I showed you this last time, that every time we have a big run up above these levels here, around about the 80 mark, what we do see is a fall. So if you look at the top here, I'll mark them here before for you, top here, top there, etc., etc., you see that there is a fall, a corresponding fall. So what can we expect here? If this is the normal result, the highest probability is that we're going to come back down here. So this fall here corresponded to this one here, this fall here corresponded to this fall here, and this one corresponded to this fall there. So as you can see, the RSI is giving us a clue that when it goes up to a certain level, it's overheating, it's overbought, and this is the outcome. It comes back down. So this is why I'm thinking now that this is going to be coming down very, very shortly. So keep your emotions intact. Don't get sucked in to the market of the hype that's there at the moment, that we're going to go to 14 and 20 and etc., etc. The likeliest outcome is this here. The second indicator I want to show you is the Bollinger Bands. Here are the Bollinger Bands. I showed you this in the last video, that every time we move outside of this top line of these Bollinger Bands, the price moves back in. So I said to you that it may be that we go sideways first to get back into the Bollinger Bands and then we dump down. So it's exactly what's happening here. We've gone back into the Bollinger Bands, and the next phase should be to come back down. It can keep on going sideways, and that'll reset the Bollinger Bands to the downward pressure, to the downward side. But if you look here, as soon as we went outside, we had a dump down here. And if you look down here, every time we went outside, we came back down. Again here, we came back down. Again, every time we go out, we have a same scenario playing over and over again. So what is the probability that this comes back down? Very, very high. So that's the second indicator that's showing us that. Okay, finally, I want to show you something very interesting that's developing, and you have to really keep your mind on this, that in the next few months after the elections in the USA, this is a very possible scenario that could easily play out, and I want you to be aware of it. And that is that there could be an almighty crash in the markets. I am expecting at least some crash, but it could be a bigger crash than you might be thinking at this moment. And I've given you this chart here, which is the Dow Jones, and I've deliberately drawn it from the 1929 crash that we got here. And look at the price where it fell to this channel down here. And that fall, if we just measure it, sorry, if we just go back, that's it. If we measure this fall here from the top to the bottom there, 89%. Now the current uncertain situation, I would argue, is that it's no better than what we were having over here, because the economies have virtually collapsed because of this COVID-19 situation. So what are we expecting? Well, if the crash is as bad as this one here, we could go all the way down to these levels at the bottom of this support level, and that is, let me measure it for you. We could go anywhere around the 60-70% fall mark here. And this is very possible. I know it sounds alarmist, but you have to be aware that everything is possible in the market. And we have an unprecedented situation with the COVID-19 and the unemployment and the economies all around the world being in the turmoil that they are, that these are the support and resistance lines that you have to be taking into account. And the thing that we are interested in is obviously what would happen to Bitcoin if this happened to the markets. And the situation that we just had in March, where everything fell, is something that could easily play out again. And although Bitcoin has recovered very, very strongly, and I would expect Bitcoin to recover once it does fall with this, if this is the scenario that it plays out, we could easily obviously see another bounce. But we must keep an eye on this, that this is a possible scenario. In the last video, I asked a simple request from all of my subscribers and everybody watching this video, that could we actually get to 50 likes? And guess what? For the first time, I'm very, very grateful that we got to the 51 likes. And to all those people who click the like button, this is exactly what I want to say to you. Thank you. Okay, so if you're looking for a trading platform to use and you haven't got one, or you've already got one and you want to add another one as an alternative, then please scroll down below our videos and you'll find that there's a tab here called Show More. And when you click on that, you'll have all the information, including the affiliate link that we have here with Etoro. And what I've done is I've given you all the good reasons why they're such a fantastic platform to use. It's very easy to actually deposit and withdraw money, as well as to actually trade on the platform. So check that one out. So we'll wrap it up there. Thank you once again for watching. Please remember, we're not financial advisors and all our videos are for educational purposes only. If you found value in this video, then please do remember to come back up here and actually click the like button, and also to actually turn on the notification bell, as well as subscribing if you haven't already done so. So until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.